even though Canada isn't officially in a recession, it sure feels like one to a lot of people out there. When we look at economic indicators, we look at things like the high interest rates, which are still higher than a lot of people would like. We take that, we add it to inflation, which is still higher than a lot of people would like. We're seeing these economic issues starting to take a toll on a lot of people. You take that, you compound that with softening retail demand that we've seen. If you read our Pulse newsletter every weekend, you'll see that report recently, rising unemployment rates. This is stuff that usually happens when a recession hits, but there's a twist in this case. We've seen population growth at a pace in Canada here that's acted a little bit like a safety net or a saving grace, and it's kept the economy from dipping into the red. Since mid-2022, Canada has seen more than 2 million new people come into the country, and that has kept the overall economic engine running. This influx of immigrants has been a crucial aspect of supporting consumer demand, providing a steady stream of labor, and that has helped stabilize the economy. Now, that said, we've still seen the real output per person has dipped in 6 out of the last 7 quarters. So that's not a good thing. You also look at unemployment. It's on the rise. It climbed by 1.6 percentage point from the lows that we saw after the pandemic. And half of the increase here, that's because of more layoffs, which are up by 20% from past year. Then you have the younger crowd. You have students, you have fresh graduates who are finding it particularly hard to find jobs. The unemployment rate amongst youth is higher, obviously, than we'd like it to be. Then you look at the GDP per person. That's taken a hit. It's down by 3.1% from what it was back in 2019. The bottom line here is that clearly without the population boost that we've seen, our economy would likely be shrinking. Immigration has effectively served as a buffer against recessionary forces, and that is underscoring the vital role that it plays in sustaining economic health. Now, looking forward, the Bank of Canada, they have to do more to stabilize the economic situation than just relying on new people moving into the country. They've started to ease up on interest rates. They're trying to give everybody a bit of a breather. They've trimmed rates so far by 25 points. That was last month, back in June. More cuts are expected this week. They're hoping to bring the overnight rate down to 4% by the end of the year. These cuts should help, and especially for those folks with variable rate mortgages and other kind of debts. By mid-2025, if we keep our fingers crossed here, we might see the real per capita GDP start to climb back up again as the hit that we're taking from high interest rates start to ease. Well, it looks like the Bank of Canada is gearing up to lower interest rates again this week, and they've kicked off the easing cycle last month when they dropped their policy rate from 5% to 4.75%, and that was the first cut that we've seen in 4 years. This Wednesday, pretty much everyone's betting that Governor Tiff Macklem, they will shave another quarter point off the current rates. And when we look at their earlier efforts to dial back spending, they really wanted to cool down a red-hot housing market that's still an issue today. They wanted to get supply back into balance, to the supply and the demand balance. That's actually helped to pull inflation down under 3%, moving towards their target of 2%. And that's down from 8.1% just a couple of years ago. Now, with inflation inching closer to that 2% target, the current rate seems a bit high to a lot of people. If we look at what Jeremy Kronek from the CD Howe Institute says, inflation has gone down and the economy is definitely softening. Now, when we look at the financial markets, they're pretty much expecting the cut with the odds of a quarter point drop on Wednesday sitting at 90% right now. So let's call that almost a done deal unless anything really strange happens in the next couple of days. If you look at a recent survey, there was 22 out of 30 economists were also predicting this cut. This upcoming cut should be good news for folks with variable rate mortgages, which of course change typically with the central bank's rate. So even with the June cut generating some activity in the real estate market, high mortgages are still keeping many would-be buyers waiting on the sidelines. Are you looking for a smart way to invest your money and achieve your goals? Well, whether you want to diversify your portfolio, access innovative solutions, or simply align your values with investments, BMO ETFs and mutual funds can help you. BMO ETFs and mutual funds, they offer a range of products across different asset classes, geographies that are designed to suit your needs and preference. You can also benefit from their market insights, which help you make more informed decisions and hopefully optimize your returns. Don't miss this opportunity to potentially take your portfolio to the next level. Contact BMO ETFs and mutual funds today to discover how they can help you shape your future. Visit bmogam.com. That's BMOGAM.com today and find out more. The upcoming U.S. presidential election is stirring up the financial markets, and this coming in light of President Joe Biden's announcement that he will not be seeking re-election, and he has endorsed Vice President Kamala Harris instead. This shift that we've seen here is now at another layer, as if they need another layer of uncertainty, but it certainly is the case, and it's making a lot of investors sort of reassess their strategies. Up to this point, there had been a high degree of confidence that Donald Trump's potential return to the White House would influence various market behaviors. Gene Munster of Deepwater Asset Management, he said there was a lot of confidence about Trump winning. The markets won't like this new uncertainty. Biden's exit has also prompted a reaction to traditional safe haven assets. Since the announcement, the Swiss franc, U.S. Treasuries, the yen, and gold all saw modest demands, while Bitcoin edged up to the highest level in over a month. So this market reaction, it sort of underscores the volatility that is brought by Biden's decision here, the uncertainty surrounding the Democratic candidate's effect or impact on the election. Glenn Capello of Mishler Financial, he said people had gotten to the point where they were piling into the Trump trade, with it beginning to become a real narrative. So the Trump trade, as it's known, that sort of included expectations of fiscal expansion, higher trade tariffs, something he talks about a lot, more deregulation, that had boosted the dollar and other sectors. But now with Biden stepping down, a lot of investors have to consider what this race will unfold. And we look here at what Stefan Koopman of Rabobank noted. He said Biden's unprecedented decision does introduce a wild card into the campaign, possibly leading to market volatility. Now, President Biden's endorsement of Kamala Harris has shifted to what's now probably going to be known as the Harris trade, and what that might look like. Bloomberg intelligence analysts, they're predicting a continuation of the current policies, but with the potential for increased focus on tax relief for lower income consumers and additional regulatory actions. As the campaign progresses, traders are going to be closely watching the shifts in polling for the various impacts on various sectors, particularly energy. Kathleen Brooks of XTP, she mentioned Harris was considered tough on oil and anti-shale and fracking. So in summary here, the election's reshuffling, this has introduced additional volatility, uncertainty, and this is causing investors to rethink their strategies amid this constantly changing political landscape. Fairfax Financial, they are set to acquire Sleep Country Holdings in a deal that's valued at approximately $1.7 billion. And the acquisition involves a subsidiary of Fairfax purchasing all the issued outstanding common shares of Sleep Country for $35 per share. And the transaction is expected to close in the fourth quarter of this year, of course, pending court approval, other standard conditions that you see in deals like this. Now, Sleep Country's president and CEO, Stuart Schaefer, expressed confidence in the deal, saying it clearly demonstrates the value and strength of our brands and organization. The company then plans to delist its common shares from the TSX once the sale is finalized. Now, Christine McGee, who's the co-founder of Sleep Country, chair of a special committee of independent directors overseeing the negotiation, she emphasized that the agreement provides a certainty of significant and immediate value to the shareholders. And finally, Prem Watson, who's the chairman and CEO of Fairfax, he added that they are excited, of course, to collaborate with Schaefer and the Sleep Country team to continue developing the company's success. If you're not subscribed to our Pulse newsletter, I'm going to make that easy for you. I will put a link in the description of this video. Go ahead and check that out. That comes out on the weekends. I'm here Mondays and Wednesdays with this report. As always, thank you so much for watching. We'll see you in the next video.